Hey everybody, Brian Shannon here from Alphatrends.net. Today is Friday, the 20th of December, 2013. Hope you had a good week. The market certainly did. S&P 500 up close to 2%. The Russell 2000, 3.3%. And gold got crushed, as it should. It's in a downtrend, so it's guilty till proven innocent. Let's take a look at the action and just remember that these numbers don't reflect dividends. The S&P 500 did pay another dividend today, so it was up $1.06. It's not really reflecting it there on the chart because of that dividend, but the path of least resistance is still higher highs and higher lows. We got down Wednesday, close to that rising 50-day moving average just after the Fed came in. I don't know why all those lines are on there. Anyways, we broke this little downtrend on the 5-day moving average after the Fed. We took out this little level and then the 179.75 level, and really the buyers really gained control here and maintain that control. For next week, what we'll want to see is that we stay above this rising 5-day moving average, and our band of support should now be found between 180.25 to 180.50. As long as we remain above that, I think we remain innocent till proven guilty. This past week, of course, we got very cautious as we got down towards this level here, but that band of support just under the 178 did end up holding. So now we are again at higher highs and higher lows. When the market starts pulling back on the intermediate term, it's prudent to be cautious. It's prudent to trim the positions that aren't working for you. And then the good news is that there's always another opportunity around the corner. And even if you missed out on this particular part of the rally, there have been just some fantastic stock movers the last couple days. We'll talk about those shortly. The NASDAQ was up 60 cents, so you can see here it did close at a new high, and that 86.50 hasn't been seen in, well, what is it? I guess about more than a decade here. So we continue to rally up towards maybe the 90 level. Anyone can guess and tell you what they think the resistance is. The fact is this market hasn't shown any resistance. It's higher highs and higher lows, and we have rising moving averages. And so again, as long as the daily 50-day moving average is still rising, then we're innocent till proven guilty, and we treat the intermediate term pullbacks under the 5-day moving average as intermediate term pullbacks within a primary uptrend. Now the NASDAQ this week, we did break some important support here briefly, and then came down and touched upon this 84 level, which was this prior resistance. So going forward next week, you can see here we've got this about $85, 85 and a half. I think 85 and a half to 85.75 is really what we want to see hold as support. We've got a rising 5-day moving average, and as long as we remain above this band of support next week, then we're innocent till proven guilty. It doesn't mean you can just chase the market. You have to prudently buy after small pullbacks or find the stocks that haven't moved, and that's what we do each day in Alphatrends. The Russell 2000 came close to its high. In fact, actually, I guess it did close at an all-time high. So today's 1.69% rally helped it close at an all-time high once again. A lot of people have, said it's up too much and whatever else they say. You can say the only reason the market is up is because of the Fed, and maybe that's true. But the fact is, who cares about the reasons? Just go get your share. Don't fight it. That's only a fool fights it. But the Russell 2000 we saw did get back up above this important level, and that was the 111.5 level. So let's take a look at a 30-minute time frame, and you can see here we then came beyond this 113, which was really important as well. So we've got a rising 5-day moving average, and what I'd like to see for next week would be probably about this 112.75 to 113. I think if we pulled back down towards that, we would see the 5-day moving average catch up to it as well, and that would continue to put us in good shape for further upside from here. So again, it's innocent till proven guilty. The semiconductors really recovered nicely. They were really starting to, I thought, we had the possibility that since this 41.40 to 41.45 was broken, I thought there was a possibility it might act as resistance and bring about a further decline, but obviously that didn't happen. You don't want to short when the 50-day moving average is rising, and that's what we had here, and we tested that 50-day moving average. So for people who fought the trend, basically, whenever you fight a trend, it's my belief that you get what you deserve, and I've fought trends, and I've lost money, so trust me, I'm not saying that with any type of mean-spiritedness. It's just the fact that the path of least resistance is the way to the low stress way to make money in the market. Next week in these semiconductors, which obviously rallied nicely, we're going to want to see 41.80 to 41.95 hold as support. If it can continue to do that, there's no reason to think it just can't continue to rally here. We've got important levels that we've gone beyond, and we have good momentum and good breadth in this market. The financials are up at highs as well. They bounced right from that rising 50-day moving average, and if you recall, the 21 to 21.10 was the band of support that we had identified as the important level that this market needed to hold. That as long as we held above that, we're still innocent till proven guilty, but cautious with this declining 5-day moving average. So in fact, there are those lines. You can see that just after the Fed, we briefly came down and touched 21, and then we blasted beyond these next important areas. So now 21.45 really to 21.50. That's the level I'd like to see hold as support next week. If we can do that, then we remain innocent till proven guilty, and there's no reason to think that we can't continue to move higher. We're bullish on all time frames. There's nothing here to suggest a top. At shares of Apple this week, we did see decline. So last week we spoke about the loss of this 558 level and 558 to 560, that was likely going to lead to a deeper pullback, and we drew these Fibonacci lines. You can see we didn't get quite down to 61.8%, but earlier in the week we had some resistance form at the declining 5-day moving average. So if we look at the 10-minute time frame, you can see we almost touched precisely on that declining 5-day moving average and then continued lower. Now the last couple days we do have a higher low, but we've got this potential band of resistance up in here between 555 and 560. So I think for now, the primary trend of Apple is clearly still higher. Maybe we continue to pull back a little bit. It's just too tough to say. These are some important trend lines, but again, the primary trend is higher, and I think that you want to let the shares of Apple settle down a little bit before you do decide to make any new purchases. As you know, I've been bearish on gold all year. I've been saying that it's guilty till proven innocent. It's in a downtrend, that we've got all these moving averages heading lower, and we've looked at this retracement from the 2008 lows to the highs in 2011, and I've been saying that it seemed likely to me that we'll see new lows this year. Well, we didn't quite get them this week, but we're very close to new lows for the year intraday. You can see that these lows down here were 120, 116.74. Is that the no? 114.68, or I guess about 114.68, and we did get down possibly to that. What was the low this week? We had 114.50. So we took out that low by 18 cents, and as we often do, we get a little bit of a bounce there. But again, if they don't scare you out, they will typically wear you out. There's no reason to buy gold here. It's still in a downtrend. It's still guilty till proven innocent. There's no reason to buy. What you want to do is you want to focus on the low risk, high probability trades. We had great trades this week in VMware. VMware, we were buying right here just as the momentum came back into it. Shares of BITA right here were a great trade 2 days ago. Shares of Triple D, just as it broke this little level of resistance, were something that we got involved in. Today we got involved in Bolt right here at $5.80 and rode that up to here we are at highs not seen for several years. And these are the types of stocks like LNG today. Just even when the market had been up on Wednesday and Thursday, there are still low risk, high probability trades where you can see that this stock was up 4%. Today we had ISIS. We were talking about ISIS just above this level here, and it moved very nicely out into all-time high territory. GPRE was another one we bought right here on Thursday, just as it began its move above $17, and I think it was $17.60. So real nice movers still out there, and the fact is not all the stocks that I pick at Alphatrends are winners, but when we have losers, they're very small ones, because we have a very consistent method, a disciplined approach to looking at the market and identifying the momentum points and low risk entries where we can maintain our stops at reasonable levels, so that when we are wrong, we have very small losses. So I hope everyone has a good weekend, and it's been a great week and year for you. I know a lot of you will be out next week. I'll still be in, I think, well, at least Monday. So have a good weekend, and Merry Christmas as well.